Is. All right, you got the music going. Oh, that's me. Am I on?
Yes.
Are they seeing me?
Yes.
Hi, everybody. Hi, my name is Glenn Tompkins, Senior Instructor here at VectorVest. Joey has a way of putting me on without me always knowing that I'm on. Bad Joey, bad Joey.
Blame me.
All right. Glad to have you here for our stream, our live stream for Trending Thursday. Tell me if it's working. That's what, is it? Excellent. For our live stream for Trending Thursday. Glad to always be here. Glad to always have you here, especially our new people that show up. If you can hear us, let me know. Type in the room that you can hear me, that everything is good. Sitting to my right, that's Joey. Say hi, Joey.
Hi, Joey.
He's my producer in the background. He's the guy that makes me look good, and you know, he doesn't have a lot to do because I look good. Right, Joey?
Full-time job.
It's not a full-time job. I'm gonna take off my rings real quick. All right, so with that, man, a lot of people in the room. Look at all that action in the room, Joey. Man, this is good. We are growing by leaps and bounds, and it's all because of you guys. Evidently, you like the content, and if you do, we're gonna keep bringing it. All I say is, if you haven't subscribed to the page yet, please do. I'm looking at all of the people who comment or people who show up. Do you know we still have a higher percentage of people watching this video who are not subscribed to the page? All I'm saying, folks, if you like the content, subscribe to the page. Subscribe to the page. We are definitely growing by leaps and bounds. We definitely appreciate the support. You guys are awesome. All right, tell me about Sox ass. Ash can tell you this. When we get towards the end of this presentation, you're going to put your stocks in. We're going to take a look at them. All right, we'll do that. So I'm not Dave. I'm not going to look at individual stocks yet. Not yet. All right, and Jay, the word is not mug. Stop, Jay. All right, so Joey, move that away from me before I get all caught up in it. Joey's going to move my chat away. And so I can't watch the chat right now, but when it comes time for me to watch the chat, I will see you. We're going to get hot and heavy into this, all right? So with all of that being said, with all of the people who are here, all the new people that are here, all my regular people that are here, man, I'm watching the views that we get on a weekly basis is just getting better. What's going on in the market? That's where we start. We always start every week of what's going on in the market. And this is a place where you can get a real feel of what's truly going on in the market. We all know that the market looks tough. A lot of the country is on lockdown because of social distancing. A lot of people working from at home. And now we're getting into the point that we're looking at hopefully opening up the country soon to help our economy, to help. And people are now starting to get stimulus checks. So there's a lot of things, and you're going to get caught up in the whirlwind of things that are going on. Let's start with the homepage. As you open up the VectorVest software, for those of you who are not subscribers to the VectorVest software, you can take a trial. Joey's going to put a link in the room for those of you who are not subscribers, where if you want to take a free trial to the software, this is where you click on that link to do so. All right. This is the homepage of the VectorVest software. We can see what's going on in the market today. As you can see, all of the major indices, we are mixed. The NASDAQ is slightly up. And someone says, what's holding up the NASDAQ? Probably one of the bigger tech stocks is what's holding up the NASDAQ today. Remember, the NASDAQ looks at about 4,300 stocks, but it's very tech heavy. Could have been Apple, could have been Google, somewhere along those lines. I'd probably have to take a look to see what's keeping the NASDAQ up. How about the S&P 100 just went and flashed positive? Today is a mixed day. The Dow is leading the charge to the downside, though, down 167 points. So I knew that with the news going on in the market, with the jobs number yesterday, with the retail numbers, we were probably in line for a day or two of the market pullback. We're going to talk about that in a second. All right, so we can see currently we have a mixed market. Looking at our daily market timing or micro timing gauge, because we are one tick into the red, the color guard is mildly bearish. That's because our relative timing indicator has fallen on a week over week and day over day basis, now flashing a red light. This looks at the short-term price trend of the market, folks. Tells me if the market is in an uptrend or not. Cast on a scale between 0 and 2. The market has been in a downtrend, but it was getting stronger, and for the last 2 days it has pulled back. thus now flashing a red light. The price of the composite is higher on a week-over-week basis, but lower on a day-over-day basis. The buy-to-sell ratio is higher on a week-over-week basis and actually higher on a day-over-day basis, but because this indicator is below the value of 1, it still flashes a yellow light. If you're in the market right now, and this is more so for the benefit of the people who are not subscribers to the software, if you are in the market right now, our color guard is our traffic light into the market. What is the main color you see in the color guard? Yellow. If you're in the market, this is a time to be cautious with your stocks. Not telling you to close them out. I am telling you to tighten the stops on those stocks. Why? Because we're still in a volatile market. The market's up one day, down one day, up one day, down one day. And with that volatility, it's volatile because there's uncertainty in the market, and markets don't like uncertainty. COVID-19 has got us by the, wow, I was going to say a couple of different things. I'm being easy. It's got us by, it has handcuffed us as an economy. And at this particular point in time, any news, whether good or bad, can move the market on any given day. 2 bad days of news, retail sales yesterday, jobs report today, both of those have affected the market adversely. But there's a lot of silver lining right now, a lot of the flattening of the curves of the COVID cases all over the United States. Thus, we're starting to think about reopening, but we'll see how that works out. All right? So,
what causes RT to go red again?
What causes RT to go red? Well, any one of these indicators that go red means that the indicator fell on a week-over-week basis from 0.77 to 0.75, and then also fell on a day-over-day basis from 0.77 to 0.75. When the indicator falls on both the week-over-week and day-over-day basis, it will give you a red light. Thank you for that question, Joey. All right, notice that the buy-to-sell ratio didn't do that, but it would have flashed a red light if it went down on a week-over-week and day-over-day basis. And the same thing with the VectorVest composite. All right, with all of that, let's start talking about what news is affecting the market. Let's go to our first news story. All right, and what I'm going to do is, before we do anything, and this happened today, the jobs report came out. I didn't put a story in because all of these stories are already made throughout the week prior to today. But the unemployment numbers came out, 5.5 million people signed up for unemployment. I think we're sitting at about 22 million folks out of work. That's a lot of folks. So the coronavirus closures froze swaths of U.S. economy in March. So, man, it is just tough. A lot of people out of work. I'm hoping that the stimulus checks, or at least tiding people over for a little bit to help them with some of their bills. I think that the government, at least doing that. Understand, I've been talking over the last couple of weeks that the Fed has said they've opened up the spigots of everything that they can do to make sure that the economy stays afloat. So they are buying bonds, they are buying debt, they're doing everything that they can, and now the IRS is putting out the money. That's part of a $2 trillion stimulus package, the biggest by far has ever been put out. So the Fed is dipping in all of its tools to help us out. If we scroll down a little bit, large chunks of the U.S. economy froze in March as the coronavirus pandemic closed malls, restaurants, factories, mines, causing Americans to cut retail spending by a record amount and the country's industrial output to plunge at its steepest rate in more than 70 years. So that's what's going on in the market. Why did that do that? Stop it. 70 years. That's huge. That is huge. All right, the next story, talking about the coronavirus economic reopening will be fragile, partial, and slow. And I think that that needs to be done that way. If we're going to reopen because we think that everything is good to go, folks, don't get complacent. All right, just think that, all right, everything's good to go. Let's go. Woohoo! Party, party, party. Listen, it needs to be done systematically. Walt Disney reached a coronavirus milestone of sorts last month when it reopened a portion of its Shanghai Disney resort as China's pandemic began to ebb. All All right, so I think that as we start to reopen society, it will be done partially, it will be done slow, but a trip to Tomorrowland may never be the same. Guests at the Shanghai resort, and look at this, must wear masks at all times, removing them only for eating. So now, in order to open up, there are some things, precautions that still need to be done. Because we don't know that as we open up, if we can get a relapse of what the coronavirus has already done and even become worse. Keep that in mind. Keep that in mind. All right, hours and capacity are limited, and just to gain entry, visitors must submit to a temperature check and present a government-controlled QR code on their phone that indicates they are virus-free. I don't know if we're going to get to that extreme here in the United States, but man, society, based on what we've gone through, is going to be totally different once we open back up. We're going to open up to a whole new society. I'm just thinking that. That's not doom or gloom. That's just facts, folks. This story in and of itself is pointing to a lot of things that as the country opens up, what's going to go on. All right. So those are my 2 stories. To include the jobs report actually makes 3 stories. But this is what's going on in the market. So now we're going to go back to the software, and I'm going to open up our watch list of stocks that we have. Every week, we have a list of stocks that we take a look at as far as stories-wise, but we always take a look at the SPDR and the VVC. Those are the 2 indicators that we can use to look at what's going on in the market. For those of you who are not subscribers, we use the VectorVest composite, which is an arithmetic index average of all of the stocks that we track. Currently, folks, we track over 8,100 stocks in our VectorVest composite. The SPDRs track what? 500 stocks. Because we track as many stocks as we do in our indicator, we feel that it is a better representation of broad market movement, and we use it for timing the market. Let's take a look at these 2. So there's the SPDRs and the VectorVest composite. Let's open that up. Put this on a 3-month graph. Let's go put this graph layout on the VectorVest layout. Look at that. The SPDRs coming off of, and this is what I've been tentatively calling a market bottom, was on March 23rd. March 23rd, the market fell after all the coronavirus. What I'm looking at is a 40-day moving average, the simplest way to have gotten out of the market prior to now. How about the price of the composite falling below the 40-day? Wow. And look at that since then. Then we've now jumped above the 40-day. We are trending higher from the low on the SPDRs, but look at that last couple of days pulling back towards the 40-day moving average. And just be careful. Someone said to me, I did a training for someone today. Hopefully they're here. Jeff, if you're here, say hi. I did a training for someone today, and he said to me, is this a dead cat bounce? And you know something? I'm not sure. I'm not sure if I'm ready to call this a dead cat bounce. Let's draw a freehand line from the low. Here's my trend line. I can draw a trend line on the SPDRs anywhere. All right, I can draw a trend line on the SPDRs anywhere. But here's my trend line on the SPDRs, and where are we coming back to? That level of that trend. What should happen if this is a good trend line? It should bounce and keep moving up. Or if it falls, the market's got more downside. And Jeff's question about this being a dead cat bounce could be in play. Could be in play. Let's go look at the VectorVest composite. There it is. I'm going to draw another trend line connecting the lows. All right. And there it is. We're still above the trend line. The VectorVest composite, as opposed to just pulling back, is moving a tad bit sideways. Yesterday's down day, retail sales. Today's down day, unemployment number. But notice that the candle for the unemployment news is not nearly as bad as yesterday's retail numbers. I'm thinking that a lot of people knew that the unemployment number was going to be high. So it was sort of kind of baked in, but we do have a trend line. And keeping on top of the trend, how about RT moving higher as the market moved higher, and now it's starting to pull back. The trend is dissipating. And I can put other indicators. If you're a subscriber, I am doing the special presentation this week, and it's all about following the trend. So make sure you're there for that. All right, so that's what's going on in the market. That's visually what's going on in the market. Joey, do I have any questions as I drink from my Michigan cup of coffee?
Go blue.
Go blue. What do you know about Go Blue?
What is a What is a dead cat bounce?
A dead cat bounce. Think about it from a visual standpoint. Take a dead cat, drop it, what does it do? It bounces and it goes back down. A dead cat bounce is just that. A bounce off the ground and then come back down to the ground. That's what a dead cat bounce is. All right, so could we be experiencing that? I'm not ready to jump on board and say we are, especially knowing that the market is at a point where the Fed has got everything open to buoy the economy. Any other questions, Joey?
Why use 40?
Why use the 40-day moving average? Because on that graph that I looked at, that was the default layout on that market timing graph. All right, normally when I look at the stocks in here, the individual stocks, I've started looking at a 20-day exponential moving average. But on the market timing graph, it was just defaulted to our default graph of a 40-day moving average. That's why I used it. Any other questions, Joey? Joseph?
No, sir.
That's it. All right, let's get to our next story. All right, and my next story talks about gold. How many of you, and Joey, tell me how many people answer, how many of you have been investing in gold most recently? And this is the reason why I'm bringing it up. How many of you, just type a me in the room, how many of you have been investing in gold most recently? Joey, tell me if anybody's answering.
Yes.
All right. So with that being said, why is gold on the rise? Let's talk about that real quick. With all of the money that's out there as far as stimulus, what's happening to the dollar? The dollar is starting to get devalued. With the dollar getting devalued, where are people running to? Well, people, for the most part, when people get scared, they go to gold because gold tends to be a place of safety. But this was done a couple of days, actually yesterday. Gold falls as weak data dent broader market sentiment again. When the market starts getting better, starts rising again, or if the dollar gets stronger, because you know the Fed can use another tool to buoy the economy. If the Fed drops the interest rates again to zero or less or negative interest rates, what will that do to the dollar? All right, just think about that. What will it do to will it help the dollar or hurt the dollar? If they're lowering the interest rates, most likely it's going to help the dollar. So they haven't done that yet, but as we put a lot of money into the economy, the dollar starts to get devalued, people run after gold. All right. Investing on gold traded like a risk asset again on Wednesday, falling alongside oil and equities while other haven assets rallied against the backdrop of a dismal economic data. All right, so normally what goes with gold, silver and gold tend to follow each other. So let's just talk about it. This was just the icing on the cake just to look at the story. What I want to do is go into the software. And for gold, I do have a stock that I'm looking at for gold, and it's the Huey, the gold bugs. It is an ETF. And I often use this as a means to determine whether or not it's a good time to be in gold. On our daily color guard reports on Monday, we do talk about gold. I'm going to open this up. Notice that as an ETF, though, the gold bugs are a buy recommendation. RT is nicely high on it, so gold is moving. Let's right-click on it, view the stock graph. As gold was rocking and rolling because the dollar was getting devalued, look at the move on gold. Let's put this on a 3-month graph. Where's my layout for? Nope, not that one. No, not that one either. Dang it. This is using the 3 and the 8. I don't want to use the 3 and the 8. Let's go change this up a second. Let's go still using EMA, but I'm going to change this to a 20. 20. And someone asked me last week, why am I moving now to a 20 EMA? Because a lot of these stocks that we're looking at in the news, I want to look at them more from a swing trade perspective. In the Jockey Club, we use the 3 and the 8 more for a trading perspective. But in these sessions, when we're looking at stocks from the news, I want to look at these more so from a swing trade perspective. I do want volume, but volume is not on there. All right, so what's the Huey doing? Over the last couple of weeks, coming off a session of the low, the Huey did jump above that 20-day exponential moving average, fell. jumped up and now is staying above that. And I like that right now. It's challenging the 3-month high. Open candle, but it's a bearish candle. The stock gapped down this morning, started at the bottom of the candle and went up. That's why the candle is open. It's an open candle, breaking through a level of resistance sitting at 245.62. It closed here, still closed higher than that. Today it's higher than that. Yesterday was higher than that, and today it's still higher than that. That's a good point of knowing that the stock's price over the last 4 days has closed above this level of resistance. Would love to see if it can challenge this next level of resistance sitting at 261.88. So gold is on the rise, but over the last couple of days, what's gold doing? Starting to stammer out a little bit, starting to move sideways. If you're playing gold stocks, tighten the stops on them. That's all I got to say about that. If you're not in gold stocks right now, I don't think I would touch them just quite yet. Not just quite yet. But that's looking at the gold bugs overall. I'm going to do this now. Let's close out of that graph. We have a watch list of just gold stocks. Here they are. All right, this is one of the benefits of being here on Trending Thursday. How many gold stocks am I looking at? 47. If at any time I want to take a look at an industry, so the Huey is above that 20-day exponential moving average. It has been for 4 days. If I want to see what gold stocks are moving, how about I have this watch list of stocks sorted by percent price change? How about I cherry pick the ones that are moving up the most today? And how about Hecla Mining is it? Up over 3%. Let's take a look at the stocks that are up at least 1% today from this watch list. And let's go look at view the stock graph. How about this? Put this on a 3-month graph. Stock is up today. Am I really comfortable with that? Look at that. Sitting right at a level of resistance. The stock's price is having a hard time breaking out of that level of resistance. Probably not touching it yet. What else? I like Royal Gold. Look at that. Going above the 20-day exponential moving average. Broke above a level of resistance at 107.16. Moving higher. I like that. I do like that stock. What I don't like, though, is the falling volume. But even though it was falling here, look at the pickup on volume. More people starting to jump on board with it. If I'm looking at a gold stock as a possibility, this is one. Let's go to the next one. Yamana Gold. Little dip as the stock dip. When it dips, you dip, we dip. How does that song go? Put your hands around my hips. When you dip, I dip, we dip. All right, anyway, it fell. Volume fell. It rose, volume rose. I like that. The stock's got a level of resistance sitting at 494. It's got a little bit of ways to go. Love that it's above the 20-day. Next one, same thing with Kinross Gold. Challenging its level of resistance. Would love to see if it can break above that level of resistance. KNTNF, K92 Mining. A lot of people have made a lot of money on this stock. Be careful right now. Not as promising as some of the other gold stocks we just looked at. WPM. You don't know about all of these stocks, but how about we're getting ready to introduce you? Look at these stocks. Challenging that level of resistance. What else is in here real quick? MMX, pulling back. Wouldn't touch that one just quite yet. I like AEM. Look at it running, coming up to a level of resistance at 53.97. Man, some of these stocks look good. WDOFF, not ready to touch that one yet. All right, so that's what I've got going on with gold. Joey, any questions about gold? My gold story today?
Kevin says, don't low rates hurt the dollar?
Low rates, when you got lower rates, I'm not going to say that they hurt the dollar. Lower rates will actually strengthen the dollar, will it not? Especially, look at it from this perspective. If we got the rates lower, interest rates are lower, our dollar gets stronger compared to everybody else's. Right, Kevin? And that's one of the reasons why we've been doing that. We want to have the better economy out of everybody across the globe. So as we lower our interest rates, I believe, and unless somebody tells me something different, I believe it strengthens our dollar from the perspective of people buying from us. Does anybody disagree with that? All right, does anybody disagree with that? Any other questions?
Is gold close to resistance?
Oh, gold is an overall. Let's go back to my list. Gold is an overall. Is it close to resistance? Where's my 416? Let's go take a look at it. I'll answer that. Huey. Remember, that's the gold bugs. That's what we're looking at overall for the, and yeah, I'm not going to say that it's not. Put this back on a 3-month graph. It is. The resistance level on the Huey or the gold bugs is 261.88. Right now we're at 247.12. I got some upside before I get to that level of resistance. So hopefully you understand that. Yesterday though, we hit a high of 263.16 where we actually broke through that level of resistance. That wasn't yesterday, it was 2 days ago. And we were not able to come back to that. But a couple of days ago, we broke through resistance to create a new high. All right. Anybody else, Joey?
Yes.
Okay.
What moving average do you use for 1 to 3 year holds?
What moving average will I use on a 1 to 3 year hold? I probably will look at either, most likely, a 50-day moving average. Better yet, probably a 50-day moving average, or just look at the graph as a whole over that time period. All right, for the longer term holder, for the longer term investor, a 50-day moving average, 40-day moving average, right about up in there is good for long term. All right.
Why use Huey only to compare gold?
Why? It's because it's the gold bugs.
Repeat it.
All right, the question is why use Huey only to compare gold? It's looking at the gold bugs. You notice that after I looked at the Huey, I looked at a lot of other stocks that we had in our watch list. So the Huey is the gold bugs, and because it's the gold bugs, I'm using it as one central point to look at gold. And then once I've gotten my idea of what gold is doing, then I looked at the individual stocks to determine what stocks were the best plays to take. But it's sort of like saying, why look at the DJI to look at the Dow? Why don't I just look at all of the Dow stocks? Well, I got a central point of looking at the Dow Industrial before I look at just the individual stocks. Or the same thing with the VectorVest composite. All right? Yes, Joey.
So some people say they disagree with you on this, and that negative rates are bad, higher interest rates are better, lower rates, lower dollar. People want it less.
All right, so let me follow up on that by next week in regards to the low interest rates and the strength of the dollar. I will follow up. I've got one way of thinking, and before I jump on board and try to put it out there as gospel, let me find out. All right, let me find out. Tell Glenn. Oh, hold on. Somebody put the.
You got it backwards.
Say it again.
You just said that you had it backwards. Right here.
Tell Glenn got rates backwards, see above. All right, I got you. So with that, I apologize. All right, I apologize. Glenn deserves a pass on the interest rate gate. Thank you, Kareem. I appreciate it. Interest rate gate. Wow, Kareem gave it a name already. Dollar is up because it is still better than other countries. And I did say that, BJ. I did say that. I said that our economy was still good, better than other people's. So that's where we sit, and that's why I'll leave it there before I start digging me a deeper hole. See, I started sweating a little bit. That's messed up. Y'all got me sweating a little bit. I hate when I'm wrong, but I try not to be wrong. If I don't know, I usually don't talk about it. All right. That's all the questions, Joey?
Yeah.
Thank you for keeping me honest, though. I'm all right with that. I'm all right with that. Keeping me honest. What I say in here ain't always gospel. So I'm all right with that. All right. Let's go out to the next story. Boop, boop, boop. Now, next story is on oil inventories. All right, so oil inventories soared by 19.25 million barrels last week. How many people have traded oil? And the interesting thing about oil, the Saudis have cut back on production. They did a production cut. I think it's going to take a little time to catch up because there's still a lot of oil out there because they turned on the spigot and said, fine, Russia, you don't want to come to the table? We're going to just send out all the oil we want. And you know something? I got a 2001 Ford Excursion, okay, 40-gallon tank. I'm loving gas prices right now. So there still is a lot of oil inventory as it shows right here. Oil inventory soared by 19.25 million barrels. But as the production is starting to slow down, that number is going to drop, all right? That number is definitely going to drop. So with that being said, how many people are trading oil stocks, all right? Investing in stockpiles of U.S. oil, posted another huge build last week. The Energy Information Administration reported Wednesday as demand destruction from the COVID pandemic continue. Oil inventories jumped by 19.25 million barrels for the week ending April 3rd. That compared with expectations for a build of about 11.7 million barrels, according to the forecast compiled by investing.com. That brings the rise of inventories up to nearly 50 million barrels. Wow, that's a lot. All right, that's a lot of oil. That's a lot of oil out there. Let's go into my watch list. Oops, why does that pop up, Joey? Why do you do that? Stop it. All right, we're going to go back into the software. I didn't have an oil stock. I could have put in WTI, but I didn't. What I did is I went to my petroleum watch list. I have a petroleum watch list. I have petroleum ETFs. If you do want to play ETFs on petroleum, which ones would you look at? They're all sell right now. Brent, 2 times man, they're all sell recommendations. Let's go to petroleum stocks as all. Now, keep in mind, with all of the inventory that's out there, all the supply that's out there, oil's getting beaten up, right? Oil is definitely getting beaten up. And a lot of these oil stocks are sell recommendations. But interesting, as we start to cut back on production of oil, let's go look at the stocks that are starting to move out of the sell range. There's 3 of them. That's interesting. All right. All of them have positive growth rates. Look at their earnings per share. All 3 of them have earnings per share of greater than $1 or more. Right? So this may be a good start of finding some oil stocks to take a look at. Let's view the stock graphs. Now remember, I don't have any oil specific stock to look at, so look at the watch list. Look at this TCP, Petroleum Production Pipeline, coming off of this low, more green days than red days, above the value of the 20 exponential moving average. Approaching a level of resistance sitting at 34.26. Volume is pretty steady. I got a lot of trading day left. Well, not a lot, but I got some trading day left still right here. TCP, write that down. TRP was looking good, pulled back, but at least still above that level of the 20-day exponential moving average. At least keep that in mind. If it breaks below, you probably don't want to continue looking at that, or if you own it, you probably don't still want it. WMB, coming up off the low, breaking above that level of the 20-day exponential moving average, pulling back a little bit, but does still have some space. Write that down as well. Now, interesting part about this one is the stock's price is going up, watch the volume going down. That's one way of finding some oil stocks to take a look at. Next thing, why not sort the same list by RT to find the oil stocks that are in an uptrend? There's only 2 of them, TCP and WMB. We just looked at the both of those. So whether it's a hold recommendation or in an uptrend, I've now given you some stocks to look at. There's 80 stocks in this watch list. I've now at least given you some stocks to keep your eye on. TCP, WMB as a way of stocks that may be on the move as the production gets cut down and oil prices go back up. Those 2 may be stocks to keep your eyes on. All right, just keeping that in mind. Joey, any questions? No? All right, let's go back to my watch list. So that was my oil story. All right, it was pretty squeaky. You got to go put some boom. You got to do that.
I'm not doing that.
You need to do that in the background. All right. That wasn't bad. All right. Let's go to my next story. Back to streaming wars. I think that this is apropos for right now. I'm not going to ask how many people are at home, but a lot of people are at home. And now home has become your office. Home has become school. All right. Joey is one of those. Joey is at home with his kids throughout the day to try to take them to school. All right. I'm lucky. All my kids are grown for the most part. I do have a 16-year-old son. He with his mama. So she's there with him. But my girls are grown. My wife's children are all grown. We got 6 children together between them. But for the most part, all our kids are grown. So we don't have to sit at home with the kids taking them through school. All right. 1 streaming stock winner and 1 loser during the virus lockdown. How many people are binge watching things on TV? Just type in me. How many people are binge watching things on TV? All right. And I'm going to pay attention to probably two or three of these companies that are here. Disney is one of them. I should have had that in there. I don't know why I didn't. Disney is one of them. Disney has proven a formidable threat. In the last week after reporting, it hit 50 million subscriber milestone. Who's the big boy in the stream wars? Netflix. So the other one that I didn't put in here was Disney. I'm going to put that in here. But that's in my watch list. All right, but Disney was the stock that put a lot of money behind getting their stream out. They put a lot of money behind it because they're the big ones trying to go after Netflix. Netflix is the big boy. Amazon, Apple, all four of these are the big streamers. If we scroll down, there's Netflix. So we already saw Disney. Here's the move on Amazon. Here's the move on Apple. Apple, man, Apple is feeling it. Apple put theirs out. They're not moving nearly as much. So you know something? Instead of just looking at the story, let's go back to the watch list. All right, so we're going to go, the stocks that I have, and I'm going to actually add Disney here. I didn't do it before, but I'm going to do it now. All right, let's take a look at them. There's Netflix. The top stock in my list now by our master indicator VST is what? Netflix. VST of 138. Amazon is in there. Apple is in there. Disney, though, wow, Disney is at the bottom of the list. They're trying to, so now we see the story. The story says that Disney is rocking and rolling, that woo, it's gonna go. Look at how we analyze it. Disney is at the bottom of the list with a sell. So let's go look at all four of these. 1, 2, 3, 4. Netflix, definitely overvalued. Upside potential, really not there, but it's a safe stock that's, RT tells me the stock's in an uptrend. How about they grow their earnings at a clip of 27% a year? Good Gordon Jim. This company, whether it's overvalued or not, is making money because of their subscribership. And you know something, with more people being at home, Netflix is picking up more people to sign up. Whether it's more expensive than it was before, people are going to Netflix. There's a lot. Where's the Tiger thing guy at?
Tiger King's on Netflix.
He's on Netflix. I ain't never watched it, nor am I ever going to watch it. It's weird. Way weird. You watch it?
Yeah, I watched it.
Yeah, he watched it. I'm not watching that, but that's, and you know something? That word of mouth about a show like that, if you don't have Netflix, it makes you want to do what? Go get it. Netflix is jumping up on subscribers, and Netflix is the big boy. Amazon, overvalued. Upside potential not there. Also a safe stock that's moving up. So Amazon and Netflix are rocking and rolling by way of RT, that short-term price indicator, short-term price trend, and they're growing their earnings at a clip of 21%. That tells you something. It was my other stock, not this one, this one. All right, Apple. This is the one that's closest to value, even though it's slightly overvalued. Good ups. Now, overall, Apple is the fundamentally more sound stock than the other two. Upside potential above 1. This stock should outperform a AAA corporate bond. It's got the higher safety out of the three, and relative timing may not be as strong as Netflix and Amazon, but this is what I call a 3-time winner. Apple. Apple is the 3-time winner, growing their earnings at a clip of 13%. How about a couple of months ago, because they pushed theirs out, they had an earnings growth rate of only 1%. Now look at them. All right, so Apple is more the stock that's on the rise, even more so than Disney coming after Netflix and Amazon. But this is the kind of analysis that you get here, that not just looking at the story, you don't get this information. But I like the analysis of Apple over all three of these so far. And now on Disney. Disney is overvalued. Upside potential not there. Safe stock. What's hurting Disney? The short-term price trend, or RT, is below 1, and it's a sell. And Disney, with all of the money that they put behind their streaming service, they're growing their earnings at a negative rate. That's tough. And the story says that, oh, Disney's the way to go. I'm telling you, hold on, Nelly. It ain't there right now. Back up a little bit. Back up a little bit. I'm not ready to take Walt Disney as the trade right now. Upside potential is not there. The stock is overvalued. It does have a safety feature involved, but keep in mind, Disney does a lot more than just stream. And RT is telling me the stock is not in an uptrend. And if I were looking at the three, out of the four, let's view the stock graph. All right, if I'm looking at all four, Netflix is moving. Why? Subscriberships jumping up the price. It's definitely moving. No ifs, ands, or buts about it. All right, if you don't want to trade the high price on Netflix, trade the options. All right, that's another way to go. Netflix is on the rise. People are home. People want to see the tiger stupid thing, the king, which whatever the heck it is. Everybody wants to see it, so they're jumping on board. They picked up, and again, that was word of mouth. That was word of mouth, and it went viral, and everybody's like, yeah, I want to see that. Yeah, no, ew. It was. I'm thinking that it's like a train wreck that you can't turn away from. Anyway, it is. Joey says that's what it is. Amazon, same kind of thing. Amazon Prime. I've got Netflix. I've got Amazon Prime. I got Apple TV. I got CB. I got just about everything there is. I got it all. Why? Just because I can, and I like it. All right, so Amazon is on the rise as well, above the 20-day. Love the rising volume on Amazon. Now let's get to Apple. This is my 3-time winner. Now it doesn't look as pretty as the other two, right? But, and I don't like the volume going down as the stock's price is moving up. But long term, I like this as a more stable play. I like this as a more stable play because RVRS and RT are all above 1. All right, it is above the 20-day. It broke through a level of resistance, moving higher. Volume is pretty much pulling down since that low. Keep your eye on that stock. And the last one is Disney. Disney's hurting. Disney ain't doing it. Here's that level of resistance at 107.53. How many times has it hit it? Not able to break above that level. Once it can break above that level of 107.53, you might have a good go at it. You want to have a go? You can have a go. You might have a go at it if it goes above that level of resistance. All right, so even though Amazon and Netflix look good, from a fundamental standpoint, I think Apple is the better play because of the analysis. All right, any questions, Joey?
No. What is a good entry for Apple long?
What is a good entry for Apple long? Let's view the stock graph once again. You know what I'm looking for? I'm looking, even I get in at 284, if I got in 12 cents higher than the high, make sure that the stock is moving higher. That's the big thing that I want you to do. If I get in now, I have a profit target of 303.70 because that's the last level of resistance. So could I get in now? Yes. I would be careful because volume is pulling back. Put this on a 6-month graph. I'd be careful because volume is pulling back. I'd rather you be in a stock that's rising above that 20-day exponential moving average as volume is rising. Right now, the stock is rising, volume is falling. But if I pull the trigger to get in now, 12 cents higher than today's high, which would be 288.97. I needed to go higher than that. All right, is that today? I don't know. That's what I'd be looking for here, 288.19. 288.19 is what I'm looking for. 12 cents higher than that. Once I get in, I have a profit target of about 303. All right, so I like the bounce off. That's a hammer. That's a hammer with follow through, breaking above the 20-day. That would be my call right there. All right, any other questions, Joey?
Just some comments kind of saying that Disney will be better once they open the parks back up.
Well, remember, Disney does more than streaming. I did mention that. Disney does more than streaming, but even with the slower, something prior to COVID-19, Disney was still struggling because they had put so much money behind the streaming service that even with all of the parks and everything that they had, they were pretty much still sitting in the same predicament. They had negative earnings growth. I explained it back then when we were doing the streaming wars, that it was all the money that they put behind the streaming service. And even prior to COVID-19, they were still in the same boat. All right, so just keep that in mind. Any other questions?
Good.
Huh?
Good.
All right, let's go to my next story. Coronavirus. Now I'm going to talk about coronavirus stocks. All right, the president of the Germany's Federal Institute of Vaccines and Biomedicines told CNBC that everybody has been working on a vaccine for everybody. That's true. Finding a vaccine, and this is the hard part about finding a vaccine, folks, 12 to 18 months, a year to a year and a half. So there's a lot of viable vaccines that are out there. All right, there are a lot of them that are out there, but they've got to go through the FDA approval, which I think is smart. Because you can say, hey, this looks good, but if you haven't done any of the testing behind it, how do you know what the side effects are going to be? Keep that in mind. All right, keep that in mind. The World Health Organization, which that was what? It's the WHO. It says the WHO. Said that the weekend that there are currently 70 vaccine candidates. Look at that, folks. 70 vaccine candidates in development. That's a lot of companies. So I'm going to bring you to a couple of them. Here's another story that's looking at some of the companies that are on the precipice. Arthrosis, ARDS, induced by the novel coronavirus disease. The multi-stem treatment modulates patients with hyperinflammatory response to highly pathogenic respiratory viruses. And the words are too big, man. Israel-based Pluralstem Therapeutics recently announced that it treated the first patient suffering. Look at that. Treated its first patient suffering from the COVID-19 complications in the United States under the FDA's single patient extended access program. I didn't know that was a thing. Single patient expanded access program. The patient was treated with PLX cell therapy in New Jersey. The patient was critically ill with respiratory failure due to ARDS and under mechanical ventilation in intensive care for 3 weeks. This is the stock that we're going to look at. Pluralstem's main aim is to initiate a multinational clinical study as soon as possible. All right, so there's Pluralstem, and then we have Mesoblast, which is in my list already. Let's do this. Let's get into the software. So the stock that I wanted to look at is PTSI.
Clay also wants us to look at CODX.
I got that. That's going to be in my list. I got that. All right. So PTSI, real quick, stock undervalued, good upside potential. Safety is not there. That's going to happen with a lot of the biomedical companies. These are not going to be safe stocks because they don't always meet earnings because they got to put a lot of drugs out there that may or may not get approved by the FDA. And a lot of time that's going to affect their RT as well. But it's always going to be a good thing if you can find a drug company that's got rising RT as a way to go. They do grow their earnings at a clip of 10% a year. That's not bad for a biopharma company. Most of them have negative earnings growth rate. So let's take a look at this stock real quick on a graph. View the stock graph. La la la, la la la, la la la. All right. Oh, actually, this isn't. I screwed up. That wasn't the stock. It was supposed to be PTSI, but maybe it was the wrong stock. Dang it. This is a truck stock. That sucks. All right. Me back up. I don't want that. So let's make it simple. Let's go to the coronavirus stocks. Man, that was interesting. Joey screwed up my story. I have to blame someone, Joey.
Yeah, go
I
ahead.
have to blame someone. Someone asked me about Codex in my list already. A big stock. Oh, there's PTSI. There it is. Pluralstem. I spelled it wrong.
Yeah,
It was PT. It's PSTI. There it is. It is in my list. Tell you what I'm going to do. Take me off the screen for a second. For those of you who are new, I am going to give you an opportunity to take a screenshot of our list of 39 coronavirus stocks. Joey's going to take me off. All right. Screenshot this real quick. All right. 5, 4, 3, 2, 1. And I'm going to move all the way down to the bottom of the list. As soon as I find my mouse. There it is. And I'm going to give you another 5 seconds to, there's that Mesoblast is in there, which is top stock right now. It's top stock in that list. There it is. 5, 4, 3, 2, 1. All right. Now you can put me back on, Joey. That is my full list of the coronavirus stocks. And Tom, is Badger here?
Yeah.
Badger has let me know in the chats that on some days he'll wake up in the morning prior to the market start or as the market is open and sort the list by PR's percent price change. Look at Codex. How about, I'm going to do something for you real quick. Let's do this. Let's go take this back. I'm going to show you the power of this software. Let's go back to the open of the market. That's 8 o'clock. Let's go 9, 8, 9. Let's go up to half an hour after the market open. I'm going to set this list up at 10 o'clock this morning. All right. Let's see what stock was at the top of the list at 10 o'clock this morning, sorted by percentage price change. SNGX was up 19%. How about, folks, Codex was up 16% at 10 o'clock this morning. And when I go to stream from 16.79%, the stock is now up. You could have doubled what the stock did right now. That is the power behind having this watch list, knowing that these stocks are in the space of making vaccines for COVID-19. Take advantage. This is a very aggressive way to do it every single day. I can open up this watch list of stocks, set it up to 9:45, 10 o'clock, see what stocks are moving, and jump on board with them. Because I've got so many stocks in here, I won't analyze all of them. But looking at relative value, relative safety, relative timing, man, I'm doing it a simple way of at least looking at the stocks from percent price change as trades. Let's back this up a little bit. What stocks have the biggest upside potential? Let's sort by relative value. Now I've got ALXN, BIIB, ABBV. These stocks should outperform a AAA corporate bond over the next 1 to 3 years. How about the stocks that consistently make or beat earnings expectations? Sort the list by relative safety, and now REGN. So how about REGN, BIIB, LAXN are not only the stocks that have good upside potential, but stocks that also do good as far as earnings. For those of you who are looking for longer term stocks in this space, I'm bringing that to your forefront right now. How about the top 3 have earnings growth of greater than 10%, each one of them. And again, for biopharma, that's kind of rare to find a biopharma. Look at a lot of these companies have negative earnings growth rate. These companies put a lot of money behind their product, and not all the time do they get approved. How about finding the fastest moving ones by RT? Moderna. This is a stock I want all of you to keep your eyes on. This is a stock that's been in my stories a couple of times. All right? Keep your eyes on NVAX. Keep your eyes on CODX. Keep your eyes on some of these that are rocking and rolling, because you're going to get an opportunity to make some money. If you want to be really aggressive, though, on a daily basis, sort by percent price change. That's a great way to go. Tom has done it. I have done it. All right? And if you want to be longer term on it, sort by RV. What stocks have the best upside potential? All right? And man, sort by earnings growth rate. Companies, earnings. These companies make money. These are pharmaceutical companies that make money. Man, that's almost unheard of in the same sentence. Pharmaceuticals making money. So there you go. Any questions, Joey? This is going to be an important, because one or two of these companies are going to come up with the vaccine. And if you can be on the right side of that, holy smokes. Dang, Joey.
Saying let's do that for the Derby.
We could do that for the Derby, but I haven't put that in for the Derby. That's a Steve call, not a Glenn call. I run Trending Thursday. Steve primarily runs the Derby. Talk to Steve tomorrow.
And they said to put you in timeout for your mistake.
What mistake?
PSTI.
Oh, PTSIP. I was like, that's a truck. Why is that coming up? But it was in my list. I love this watch list that we've created, and we've done that for you guys. We've done that as a benefit for you guys. All right, I'm running back on time now. Anybody? No. All right, I'm going to run through real quick stories that caught my attention. General Mills and Campbell Soup expected to stay hot. People are staying home. What are they going to do? Eat soup. You know something? My wife likes grilled cheese and tomato soup. I can't stand tomato soup. I like ketchup, though, but I don't like tomato soup, and she'll eat grilled cheese with tomato soup. So, that's comfort food, right? That makes sense. General Mills, what do they make? Cereal. What do your kids eat at home, Joey? Cereal. A lot of it, too, don't they? Cheerios. General Mills. This is people who are staying at home eating stuff. And you know the bad thing about staying at home and eating stuff? See this right here? Joey got a bigger one. But you see this right here? That happens.
That was pretty big.
Huh?
That was pretty big.
Yeah, listen, it took a lot of years to get this.
It's not cheap.
It's not cheap to get that. And you know something? That's what happens. But General Mills and Campbell Soup expected to stay hot. All right, let's go to the next story. Peloton. Man, how about a lot of people getting on that bike? That bike ain't cheap. Joe, you got a Peloton?
3 of them.
You got 3 of them. There you go, Joe. You need to let me hold one.
You want to borrow
I
one?
want to borrow one. Peloton is an expensive bike, but after Roth Capital, they are getting nods from other analysts. That's exactly what that is. Breaks higher after Roth Capital Partners starts off coverage on the fitness stock with a buy rating. All right, what else is in my Square? How about PayPal, Intuit, and Square get approval to give loans to small businesses? Wow. So I got a PayPal account. They're going to give me a loan for my DJ business?
Sure.
Oh, man. Be like, DJ G Sharp, baby, here's some money. What? Anyway, PayPal, Intuit, and Square get approval to give loans to small businesses as part of the $2 trillion federal corona relief package. So let's go look at those stocks. And I had... let's go take a look at those stocks. Boop, boop, boop. So these are stocks of interest. I always come up with stocks that catch my attention. And these are my stories this week that catch my attention. 416. Let's go pull them up real quick. Doobie-doobie-doobie-doobie-doobie-doo. Peloton. There's General Mills. There's Campbell. There's PayPal. And there's Square. All right. These are my last stocks in my list for today. All right, Peloton, way overvalued. Now, the cool thing about Peloton is that a lot of people buying their bikes. But you know, are they making money? No. -2%, -2 on the earnings growth rate. They ain't growing their money. The earnings per share, though, they're not making money. Less than $1. They're losing less than $1. All right, they're not making money. I think that Peloton is doing what it's doing because it is an expensive bike. Man, I'm almost saying a lot of bad things today. But because of that, RT is high. All right, General Mills, fairly valued. The big thing about it, because it's stay-at-home stuff right now, relative timing is above 1. I hate when that happens. Let's go back. There's Peloton, and Square, PayPal. All right, Campbell.
And Amazon? Were you going to do Amazon again?
Amazon was one I wanted to do again. I'll come back to Amazon in a second. Thank you, Joey. And it's going to just be a brief overview on Amazon. General Mills, at least they're growing their earnings. Campbell, growing their earnings. How about all 3 of them have an RT above 1? They're trending higher. PayPal, overvalued. All right. The only thing that's helping it is that it's above 1 in relative timing. It's a hold. PayPal grows their earnings at a clip of 17%. They do make $345. Square, way over its value. No upside potential, no safety, not in an uptrend. So Square was tied into the story with PayPal. Interesting that Square grows their earnings at a clip of 22%. That's interesting. I have a Square account as a DJ so that any of my couples want to pay me when I do a wedding, they can pay me on Square. I can swipe their card right on my phone or iPad. So let's take a look at these stocks on a graph. General Mills and Campbell's, both of them are buy recommendations. Everybody else is either a hold or a sell. Again, stay at home, eating food. Don't get fat, folks. All right, don't do it. All right, let's go look at the stock graph. Peloton, everybody is going, you didn't wake up to be mediocre. You remember that? Do you remember that in the commercial? I've seen that commercial. The little kid says that to her dad. You didn't wake up to be mediocre. I love that Peloton is doing what it's doing. And actually, they're offering, if you don't even have the bike, there's an app. There's a Peloton app to do Peloton stuff, which I think is kind of interesting. It is moving higher, hit a new high over the last 3 months, above the 20-day. Might not be a bad play. I don't like it long-term, though. General Mills, company has been around for a while, moving up nicely. A lot more green days and red days. Watch the volume. Interesting that the stock's price is going up with not a lot of volume. That is interesting, especially since people are buying a lot of cereal and General Mills food. There's Campbell's soup. Remember the commercial? Good. Campbell's soup is good. That was before your time. Yeah, you're before your time. Campbell, though, on the other hand, is not as good looking as General Mills. It is moving higher, but if I go back to General Mills has a steeper up move than Campbell. All right, but Campbell nonetheless is moving higher. Volume is a lot more steady with Campbell than it is with General Mills. General Mills is starting to move down a little bit more, whereas Campbell, on the other hand, is a little bit more flat. All right. The next one is PayPal Square. I'm not all that super excited about it. It's moving. It's right at the level of resistance at 64.87. It's having a hard time breaking through that level. It is above the 20-day, but having a hard time breaking through that level. Be careful with that one. PayPal has broken through 3 levels of resistance, which is now another level, is broken through. PayPal is moving. Stop making all that cat noise over there, Joey. All right, whatever. It's moving up. Watch that it's moving down today. Always remember, before you pull the trigger on the stock, make sure the stock is going higher before you pull the trigger. All right, that's all my stocks for today. All right, any questions on those, Joey?
No, just some comments.
What kind of comments? Do you want to read them?
People were just talking about how maybe 7 real time and stuff's kind of locking up in the mornings.
Oh, that I got nothing to do with, and I don't have an answer for. As far as VV7 slowing down, all I know is that whatever is happening, I don't,
There's some bandwidth issues, a lot of people on it.
I know that we're working on it. There's a lot of people that's on VectorVest that normally is not on VectorVest because they're working. All right, so just keep that in mind. Be patient with us. That's the best thing I can say. All right, it's that time, folks. Joey, you're going to read them off. You're just going to read them off fast. No, don't put them up here. Don't, because you're going to confuse me. So, on your mark, get set, go. Put your stocks in that we want to see. Joey will cut you off when he thinks it's enough stocks. All right, so Joey, go.
JD. CHWY.
CHWY. Oh, Chewy. You know, we had a dog that just died, and Chewy sent us a vase of roses. I think that was awesome. All right, keep going.
TQQQ.
QQQQ. It's 3Q.
Yeah, 3 Qs.
Tesla.
HIG.
HIG.
Baba.
BABA. JCP.
TNA.
TNA.
I think Jay got me.
Okay. Say again?
EOG.
EOG.
TMO.
TMO.
Let's see.
Apple. Oh, good stop.
ABX.
Say again?
ABX.
Okay.
AMD.
ABX we do not track. AMD.
AMD.
Okay.
UNP.
Huh? UNP.
Yep. INO.
INO.
INSG.
INSG.
We did those. UNH.
UNH.
INSG.
We did that already.
NAT.
NAT.
Roku.
ROKU.
JNUG.
JNUG. You get to stop it, Joey.
Yeah, there's a couple more.
Okay.
Let's see. ABX.
ABX.
OES.
I already have it.
Oh, yeah.
SOXS. Somebody wanted to see that.
Oh, you got something else?
Go ahead.
OESX.
OESX.
And we'll just take one more here. NK.
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 Okay. There we go. We got like 11,000 stocks that I got to go through. All right. Graph layouts. Let's go take off the 40. Oh, I know what I'm on. EMA price 20. Take that off. Take that off. Let's go put on earnings and let's go put on volume. Volume. Put that on. Take that off. Take off earnings. Put on volume. Now put on earnings. And change the type to an area. All right. 3-month graphs. All right, here we go. JD.com. Love the price activity on the stock. Stock's moving higher. Stock is clearly above the 20-day exponential moving average. Volume is pretty steady as the stock's price is moving higher, but watch the earnings per share. But now I want you to understand that many stocks are going to have falling earnings. That makes sense during all that we're going through with the COVID-19. So I'm not going to put nearly as much emphasis on falling earnings as I normally do. because of that. Earnings is going to catch up. This is going to be a very interesting earnings season for quarter 2. I think it's going to be even more interesting for quarter 3. So, as a matter of fact, for the time being, because of this, I believe I'm going to take earnings off. All right, I'm going to take earnings off because a lot of these stocks that may look good are going to have falling earnings because of that information. JD coming off a low, bouncing up above that level of the 20-day exponential moving average, hitting a new 3-month high, volume is steady. I don't mind that at all as long as you buy 12 cents higher than the high. Next one, Chewy. A lot of selling pressure today, big wick at the top of the candle. Doji, very much indecision. Look at the open and close price are very close to each other. That's what creates that little itty bitty body known as a doji. Stock's price is above the 20-day exponential moving average, which is serving as a really good level as the stock pulled back for 1, 2, 3, 4, 5 days. If you didn't have something like the 20-day exponential moving average, what would you have done right there? You would have panicked your butt off and been like, oh my gosh, the stock went back up. This is why I'm liking to use it for more of a swing trade scenario. 5 days pullback, did not break below that 20-day exponential moving average, keeping you in to make money in the stock a little bit more. If you're not in it though right now, I would go wait 12 cents higher than the high. Next stocks, the Qs. As the market is starting to bounce off of that 323 low, the market's been moving higher. So the Qs have been moving higher. March 23rd, that was the bottom, the perceived bottom. I'm still going to call that as perceived bottom. We went up, the market fell, the Qs fell. The market went back up, the Qs went back up. A little bit of indecision today, definitely above the level of the 20-day exponential moving average. Volume is pretty steady, moving sideways. So this is a good look at, from the NASDAQ perspective, what's going on. This gives us more feeling that the market is moving higher. Tesla. I did a story on Tesla a couple of weeks ago because it was either last week or the week before that. They sold a bunch of cars in China, like a lot. And I'm thinking it's helping to push the stock's price higher. Rising volume, a little bit fall off for the last couple of days, but was rising above the 20-day, moving higher. I like it. This stock's got a lot of upside, at least to that level of resistance at 968. That's got a lot of upside move, and it now recently become a buy recommendation. I don't mind that. If you feel that the stock is too expensive, if it plays options. Hey, Rich, does this have options? Tell me what Trade Shark says. If Tesla has options, I would rather you play the options because $7.41 per share is a lot of money. You can use about a tenth of that to buy the options. I'd rather buy a $74 per share as an option rather than $741 per share. Did he answer? All right, he may or may not be here, but I'm assuming that it's got options. That would be an assumption on my part. All right, let's go to the next one. HIG, insurance. You know something? We always got to pay insurance, whether it's life insurance, death insurance. Well, life becomes death insurance when you die, right? Mm-hmm. All right. Anyway, the insurance industry was rocking prior to COVID-19. And it tends, people got to have insurance. COVID-19 hits, the insurance company, HIG, got hit. It's trying to do a rebound, but I'm not feeling it all together yet. All right, look at the move. It's begrudgingly going higher. Today, it's closed below that value of the 20-day exponential moving average. If I own the stock right now, that's a good level to think about taking some off the table or taking the trade off the table. One of the two. It's all totally up to you, but the stock is pulling back. Not only is it pulling back, this level of the 20-day exponential moving average does a good job keeping you out of it and getting you in. Right now is telling you shouldn't be in it right now. And the stock is a sell recommendation. Next stock, Alibaba, internet commerce. Stock is moving higher. It's challenging a level of resistance sitting at 217.44. It's about $6 away. If you get into it now or if you're currently in it, use that level as a level of a profit target right now. It is above the 20-day. Volume is pretty steady. I'm okay with that. But this level of resistance, which is really a good level of resistance, is going to be your profit target. And once it gets there, you might want to take half off just in case it does pull back. You lock in some of that profit. But if it breaks through, that's even more beautifuler. All right, keep that in mind. The next one, wow, JCPenney has been horrible forever. Look at that. Now, it had a run back in 2019. I don't know what happened. This was about Christmas time. JCPenney is not a good stock. It's just not. The stock is do you own it? Whoever gave it to me, do you own it? I don't know why. There's nothing that's telling me it's okay to own the stock. I don't care what kind of news you get on it. I can click on news. I don't care what kind of news you get on it. I got nothing that's telling me that it's okay. U.S. commercial, and this is another thing. U.S. commercial real estate braces for defaults, blah, blah, blah. JCPenney crashes on hearsay of bankruptcy. I'm surprised JCPenney is still in business. I'm surprised that they haven't gone bankrupt beyond now. The earnings growth rate for this stock, if I add the parameter of growth, they grow their earnings at a clip of negative 7%. Man, JCPenney is not and so I'm surprised that stories of bankruptcy are just erupting now. I think that's probably should have been there for a minute. All right, so that's my take on JCPenney. There's nothing good about it. All right, I'm just being honest. RT's beating up the stock. The stock is nowhere near in an uptrend. Yeah, I'm not feeling JCPenney, not even a little bit. Let's go to the next one. TNA, small cap. You know, coming off of the March 23rd low, it is moving, but you know, it's the small cap is moving like what the market is moving like. It went up, it pulled back, it went up, and now moving sideways. This is why we never fully got any kind of a sense of a full blast off coming off of the low that you want to call the bottom. And someone asked me about the dead cat bounce. I don't know if we're going to challenge that level of the low that happened on March 23rd. We might. Don't know. But the small cap ain't the place to be right now as far as that ETF. Not yet. Notice that even coming off of that low, it never went above the 20-day exponential moving average. Why is that so important? Because it looks good. When it goes above, you've seen how many stocks, when it does go above it, it makes money. When it goes below, it's losing money. All right, so keep that in mind. EOG, gold, or petroleum. Well, petroleum got beaten up. But EOG was running even while that was happening. But now EOG is starting to pull back, falling below that level of the 20-day exponential moving average. It had a quick stint above, and now it's pulling back. All right, and now it's pulling back. All right, so just keep your eye on EOG. I'm not ready to touch it right now. That's 2 full bars below the 20-day. Now, what may help you is that the volume is not there. Even on the bearish side, the bearish volume is not there. That may help you, but I probably wouldn't touch it again until it can at least get above that value of the 20-day exponential moving average and possibly break above that little level of resistance. Or, better yet, come back above this level of the gap down. Draw horizontal. See that gap? Look at that gap. I'd like to see if it can break above that level of the gap. It did so, and how quickly did it come back down? That's an important level. That 4180 where we gapped down, that's an important level because the price couldn't stay above it. That's important. Let me make that a little darker so that you can see it. That's important. That tells me something right there, that level is a good level that I'd like to see the stock's price break above. All right, next one, TMO, Thermo Fisher Science. I like the move coming off of the low, above the 20-day exponential moving average, moving higher. I've got a 3-month high sitting at about 342. I can make some money on this. All right, a little bit of an indecision day today. I got a wick at the bottom. I got more buying pressure on this candle than selling pressure, but I got a little bit of indecision going on with the open and close price pretty close to each other. All right, so a little bit of indecision as the stock's moving up, volume is moving down. Be careful with that. Apple, I love Apple. Everybody who knows me knows that I think that Apple is the best stock in the world, but I'm not ready to touch it just quite yet. I like the hammer formation right here with the follow through. Never came back down, followed through, went back above that 20-day exponential moving average. Love it, love it, love it. Broke through a level of resistance, which was at 273.56. Still above it, even though it's a down day. Still above it. I like Apple, but I got to make sure I buy it on a rising day. Volume is starting to steady out a little bit. All right, looked like here was falling, but right now sitting at that level of about 40 million, steady, 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 a couple of days below it, but steady either at or above it. All right, I would make sure I buy Apple on a rising day. All right, AMD, love that it's moving higher in that semiconductor field. Watch this though. I got a lot of selling pressure going on with today's candle. Why is that? How about a couple of days of gapping up? Gapped up, follow through. Gapped up again. See that wick at the top? That's a little bit of a shooting star pattern. Could be a change in sentiment as the stock's price moved up, but a couple of days of gapping up. Looks like today's gap up, though, may not hold like the prior day's gap, which had no wick at the top. This one's got some selling pressure. Be careful with AMD. If you own it, just watch it right now. Volume is beautiful, but that's a possible change in sentiment by way of candlestick formation. UNP, Union Pacific, Transportation Rail. Another one that's having a hard time getting out of its own way. Rose up, got above the 20. As the stock moves sideways, moving averages don't help you when a stock is moving sideways. Moving averages helps you when a stock is moving up or when a stock is moving down. When a stock starts moving sideways, moving averages don't help you nearly as much. Put it back on the 3-month graph. Stock overall is doing a lot of bit sideways mumbo, down day to day. May close below that 20-day exponential moving average. Just be careful with that if you own it. If it closes below, you may want to take some off if you own it, or you definitely don't want to think about buying any new ones right now. INO, another pharmaceutical, negative earnings growth rate. Remember I told you putting pharmaceutical and positive growth rates together is a weird term. A lot of pharmaceuticals put so much money behind the product, and a lot of times the product doesn't work by way of the FDA standards. So a lot of these companies are losing money, but they got a lot of money to keep trying to make money. This stock is stopping at a level. What is this? Do I have? Is that clear the drawings? Yeah, I think that was a Fibonacci retracement. Stock, for the most part, is moving sideways. This is on my list of coronavirus stocks, I believe. I'm not feeling this. There's probably a lot more other coronavirus stocks that I would pay attention to. Doing a little bit of that sideways mumbo, the moving average is not going to be nearly as positive. You know something? I definitely want to see the stock get out of this $10 range before I would jump on board. Watch the volume as well. Go to the next stock, INSG, Telecom Cellular, rocking and rolling. Big candle, big wick at the top, a lot of selling pressure, possible shooting star. If you own this, man, don't be afraid to take some of this off the table, especially if the stock goes down tomorrow. It's a closed candle, which means the price started at the top of the candle and came down. But a lot of selling pressure with the big wick at the top. Don't be afraid to take some of this off the table. Stocks a buy, a lot of volume. And if you got the greed factor, let me help you out. If you got the greed factor, let me give you a line in the sand. Line in the sand would be yesterday's open at about 11 bucks. This is going to be your line in the sand. If the stock's price drops below that line in the sand, folks, you probably should be out of it. That's about $1.22 away. All right, that's your line in the sand. All right, so we'll just keep that in play that way. Next stock is UNH. Woo-wee. Moving higher, moving higher. Say that, Joey. Woo-wee.
Ooh-wee.
There we go. It is moving higher. It's spending some time above that 20-day exponential moving average. Volume is pretty steady. I like that. There was a day where it was lower than 4 million, but for the most part, at or above 4 million. Stocks price moving higher. Buy recommendation. Little wick at the top, little wick at the bottom. Nice open candle. I would think about 12 cents higher than the high before I pull the trigger. Next stock, Nordic American Tank. Shippers, when they work, they work. When they don't, they suck. All right. Nordic transportation ship, when it works, it works. When it doesn't, it doesn't. Right now, I'm not feeling it. Lower highs, higher lows. It's got a little bit of a wedge going on. A little bit of a wedge going on, which is a consolidation pattern. All right, there's the higher lows. There's the lower highs. And what you're looking for in this kind of a formation is which way is the stock's price going to break out. So Nordic American Tank is in a wedge formation. It's got to break out one way or the other. If you own the stock, which you probably shouldn't right now because the stock is hitting lower highs, but if you say, well, it's moving up higher, all right, fine. If the stock breaks below the bottom of the wedge, you probably should be out of it. And if it breaks above, then you stay in it. But it is above the 20-day exponential moving average as well. All right? So there we go. You know what that looks? It looks like an iguana, right? Look at the face and with the little tongue right there. Sort of. I don't know how I pictured that iguana, but it looks sort of like an iguana. Now everybody's looking at the screen going, what iguana? It looks a little bit like an iguana. All right. Let's go Roku, one of Steve Chappell's favorite stocks. Actually, no, not really. The stock doesn't make money, but it does give you opportunities to buy. Right now might be a way, might be an opportunity. I got a level of resistance sitting at 123.79, which it's breaking above, little wick at the top. Watch that it's challenging and it's going to come back to that level. I definitely want to see a closure above that level of resistance before I think about buying it, but volume is picking up. For a company that really doesn't make any money, it does give you opportunities to get in, all right, and out. Let's go JNUG. I'm not feeling JNUG just quite yet. I know that gold was rocking and rolling. I've personally made a lot of money in my retirement, in my self-directed retirement account. It's at 673 now. I got to put this like on 1 month to get a better view. Look at the bars, small bars, a lot of volume on it, but the bars are small. Just be careful with that. But again, I've made from the stock being about $4 to got out at like 7 and some change, just in my self-directed 401k, a lot of money. So that's a good thing. I really would love to see for a good trade to break above that level of the 20-day exponential. All right, SOXS. Somebody wanted to look at it. Why? Look at it. That ain't good. Plain and simple. Below the 20-day exponential moving average, moving lower, hit a new low today over the last 3 months. I'm not feeling this at all. Not even a little bit. Not even that much am I feeling it. A couple of things need to happen. This stock needs to break above this level of resistance sitting at 1190. It's got to break above that. It's got to get me above that 20-day exponential moving average. Those are good times to trade SOXS, above the 20-day exponential moving average. Put this back on the 6-month graph, put it on a 1-year graph. Good Lord, it took a long time. Look at that. Above the 20-day moving average, good times. Below, play it to the downside. That 20-day moving average can help you to make money consistently on it if you play it on the right side of the trend. That 20-day works out very well. Next stock, OESX. Little bit of a sideways mumbo move coming off the low, pulled back, moved back up. Look at that. It's creating its own level of resistance. Volume is pretty steady. That makes sense with a stock moving sideways. A lot of indecision here, 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 here. Small candles, small bodies where the price and the volume. That actually is a Firefly. What is it? Firefly. Not a graveyard doji, but not a Firefly. What is it? Maybe. Anyway, that's more of a bullish formation that just hasn't come to fruition just quite yet. OESX, again, a little bit of a sideways move, back and forth above the moving average. But remember, when a stock is moving sideways, moving averages don't serve nearly as well. And the last stock I've got is another biomedical. Big jump. Some news must have happened right here on this day. But you know something? It gapped up. What was the open price? 427. What was the close price? 339. So it started at the top of the candle. It must have gapped up. Some news must have happened, and they gave almost all of it back. Look at that closed candle. And since then, it's moved sideways. And for the most part, it's been below that 20-day exponential moving average. Right now, it's above it. Man, I definitely would love to see if it can take out that big candle first before I jump on board with it. All right, that's all the stocks. That was a lot of stocks.
You were looking for Dragonfly.
That was Dragonfly. Yeah, like you don't act, I'm about to say, don't act like you know.
Tell Kelly thank you.
Thank you, Kelly. It was Dragonfly. What did I call it?
Firefly?
Firefly. Dragonfly. Today is like one of those days. All right, with that, I'm done. I am so done. I'm tired. That was a lot of information today. Hopefully, if you're brand new, you had some good insight. If you like this, don't forget to comment, like, and subscribe. Subscribe, folks. Subscribe to the channel. As I mentioned, I look at all of the people who watch these videos, who come to the live stream. I've got more people who are unsubscribed watching the stream than the people who are subscribed. If you are here every week, just subscribe to it, folks. Just subscribe. All right, I want to see that number show me that the people, the majority of the people that are watching the live stream are subscribers. But if you're here every week, just hit the subscribe. Look right below this. Look right below this video. If your subscribe button is red, that means you haven't subscribed yet. If your subscribe button is gray, you're fine. Don't touch it. You've already subscribed. With that, folks, I want to say thank you for joining me for Trending Thursday. Thank you so much for helping this channel to grow. You guys are really rocking and rolling this channel. I remember when we first started with this. How many subscribers do we have, Joey? 6,500, 5,500. Folks, we're on our way to 12,000 subscribers. 12,000. And that's because of you, folks. If you know somebody who likes to learn about what's going on in the market, share this with them. Share this with them. Thanks to everyone. A must-see every week. Thank you, Jay. Are you teaching another class tomorrow, today, or soon? What's today? Thursday. I've got the daily color guard report tonight, and I've got the special presentation tomorrow, but I'm not teaching anything else until Monday at 3:30. Man, I'm on this stuff a lot. All right.
Let's talk about this, and let's talk about the sun.
Can we get coffee mugs yet? Is Clay here?
I thought he told you something.
What did he tell me?
Oh,
he was looking into, where's my meeting notes? Clay said oh crap. He's looking into it. Forum, video stream, for next forum.
He's contacting Teespring.
He's contacting somebody to get the coffee mugs. So Clay was here, I thought, but it's going to be him that's going to make it happen. I don't have a class tomorrow, BJ. Not tomorrow.
What is Jim teaching tomorrow?
When is your? What is Jim teaching tomorrow? Is it the URS or?
Yeah, URS.
He's teaching. They gotta pay for that. The best thing to do, huh?
Is that closed?
I don't know. I have no idea. You would have to go to VectorVest.com/, is it events?
Yeah.
So here's all of our upcoming classes.
That's it. Just go to VectorVest.
All right, you broke it.
It's broke.
All right, but that's the place you find out to see what events are coming. Oh, it's just slow. That's what it is. It's working. It's just slow.
They're also asking about your special presentation tomorrow?
What special presentation? Oh, you got to be a subscriber. That's every week. That's the special presentation that we give every weekend. As a subscriber, you get access to our special presentation of our strategy of the week. That's for, how about a Cafe Bustelo promo? Yeah, I need some more Cafe Bustelo. Anybody want to send me any? Joey drinks all my coffee. So I need more coffee. Holy smokes. Where's Jay? Jay sent me a whole thing of coffee for Christmas. Holy smokes, he did. Real quick, our summit. We have a summit coming up in May 18th, 19th, and 20th, Monday, Tuesday, and Wednesday. It's a free 3-day online event. Go to VectorVest.com/summit. And we're going to be here. I'm going to be here. There I am. I'm going to be here along with a lot of other people. As a matter of fact, I'm hosting all 3 days. So yes, it is a free 3-day summit. You see that? This is a free 3-day online event. That means free. That means no money. Free. All right, so don't forget to go there too. VectorVest.com/summit. SUMMIT to register for the May 18th, 19th, and 20th free online event. All right. Hit the like button. Yeah, hit the like button. Hit the subscribe button. Do all of that. Is it pilot priced? What does that mean?
I'm trying, Badger. Let's go. Rip it up.
Oh, Joey, the audience hit the like button because you made Glenn disappear. Do it again. Wow! And then now people hitting the like button. You know something? I don't want to talk to none of y'all no more. I'm done. All right, with that, folks, have a great day. Adios, arrivederci. Peace.